Folks, chip shortages creates big sizzle, and that means big sizzle in two semiconductor stocks. Now, the pandemic has caused semiconductor shortages, especially when you consider that car sales dropped off significantly during the early stage of the COVID pandemic, with manufacturers cutting orders for parts. But the focus has shifted away from cars into consumer electronics. Remember, all the tech-heavy stuff was going crazy back then, like webcams, tablets, other consumer discretionary devices to help people cope with pandemic. Just think about how many hours you spend watching Netflix. I'll leave it at that. But now we're seeing significant pickup in car sales, while the chip industry won't catch up till 2023, according to Pat Gelsinger, the CEO of Intel, who forecasts strong growth in demand over the next decade. Moreover, with chips driving national security and with U.S. set to restrict Chinese access to advanced tech, it will force China and other smaller countries to increase domestic production, which will encourage more manufacturing to be built internationally over the next several years. So, the ongoing chip crunch, the result of the pandemic-induced lockdowns, unexpected work-from-home fueled demand, and unprecedented drought in chip manufacturing hub Taiwan, it's apparently wreaking havoc upon and down the semiconductor supply chain. According to Tech Radar, industry insiders are expecting the shortage of critical components in server chips fueled by a wider global shortage is unlikely to ease until Q4 of 2021 or Q1 of 2022, with some suggesting it'll continue well into 2022. Now, with the current focus on the chip shortage, I believe a few companies will stand to gain substantial upside as a result over the next few quarters. First stock on my short list, and when I say short list, I mean the list is very short. I don't mean shorting list. First stock, 𝗧𝗶𝗺𝗪𝗀 and 𝗧𝗴𝗀, KLIC. Now, this is a leading provider of semiconductor packaging and electronic assembly solutions, supporting the global automotive, consumer communication, computing, and industrial segments. They've got it all covered. It's a pioneer in semiconductor space. K&S has provided customers with market-leading packaging solutions for decades. And again, they don't make chips, they make packaging. So if the industry as a whole increases, they grow. Remember, shovels versus gold. What always wins? The shovel play. Always, every time. Earnings per share versus previous year, 472% increase. It's a Russell 2000 stocks, which means substantially more upside potential than traditional large cap. When it comes to selling gold or selling shovels, the shovel play usually does as well or better. And while KLIC doesn't make chips, it provides packaging, which means the more demand increases, the more money KLIC makes. And with the current shortage, this sector has substantial growth potential. Now, we've seen 3 consecutive quarters of positive earnings estimates, which bodes well for the price of the stock. KLIC sports a nearly $4 billion market cap, and it's up 83% year to date. With a reasonable current PE ratio of 25 times, and the company's been around for over 70 years, 3 quarters positive earnings estimate, and a price target of $80 per share over the next 12 weeks is probable if the chip sector remains in the headlines throughout the summer, which is very likely, seeing the shortage is only ramping up. Next stock on my list, Applied Materials. Now, this company has expertise in modifying materials at an atomic level and on industrial scale enables customers to transform possibilities into reality. Man, I love how that sounds. The company offers consulting, spare parts, services, automation software, upgrades, and legacy equipment to improve the performance and productivity of customers' equipment and the fab operation in the chip game. They do everything in the semiconductor space. It's one of the biggest companies. 120% return in the last 12 months. Earnings per share growth versus previous year, 83%. 4 quarters of positive earnings estimates and surprises, which is instrumental in bringing out directional momentum out of the stock. 14 strong buy recommendations, and amazing momentum behind the stock show strong institutional sponsorship. The stock is one of the biggest chip makers in the world, and it's continuing to exhibit strong relative strength. I believe we'll see a price target of $175 over the next 2 quarters and possibly more if the chip shortage headlines continue to dominate Wall Street over the next few months, which is very, very likely. This is a low-hanging fruit, and I like 𝗧𝗴𝗀 and AMAT. Both stocks should do well over the course of the summer. Hope that helps. Folks, there's finally a way to tell exactly when a stock might explode. That means we no longer need to spend hours upon hours staring at charts and researching stocks. All we've got to do is wait for a stock to cross this simple line, place a quick trade, and then come back and cash out big. I call it the sniper line. And knowing which stock is about to cross it could put everyday traders just like you, in front of Wall Street's biggest explosions. Click on the link below to get all the details before it's too late. And make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post my new video.